Major element seems to be just global uncertainty.
Okay.
Think back to the trade disputes started by the U.S., imposing tariffs, right, and, sparking a trade war.
Right.
Um, these global tensions create a climate of fear
Yeah.
and make international investors,
Sure.
including those with holdings in India, very cautious.
Oh, yeah.
You know?
Nobody wants to lose money.
Exactly.
Yeah.
Yeah.
So this caution translates into a specific action, doesn't it?
Yeah,
We've seen reports about FIIs pulling their money out.
right.
So can you explain what's happening and the scale of this?
Certainly. So when global economic conditions appear unstable,
Right.
FIIs often prefer to move their capital to
Get
what they perceive as safer markets.
Right.
This can lead to significant outflows from emerging economies
Uh-huh.
like India. And so the numbers that we saw indicated that 34,574 crore worth of shares
Wow.
were sold off by FPIs in February alone.
Wow, that's a lot of money.
That's a considerable amount of investment leaving the Indian market.
Yeah, so beyond just the money leaving, the value of the Indian rupee itself has been under pressure.
Absolutely.
How does that factor into this?
So the rupee has weakened and hit a low of 85.80 against the US dollar.
Okay.
And for you, the listener, this has a direct impact because it makes imports
Right.
more expensive.
Right.
India is heavily reliant on imported crude oil, for example.
Right.
So a weaker rupee means we're paying more for essential energy.
Got it. And we also saw that the price of Brent crude oil had climbed to around $81 a barrel.
Right.
How does India's position as a major oil importer amplify the effects of that high price,
Right.
combined with a weaker rupee?
Well, being a major oil importer, India is particularly vulnerable to rising crude oil prices,
Okay.
especially when coupled with a depreciating rupee.
Right.
It creates a double whammy,
Yeah.
significantly contributing to inflationary pressures within
Right.
the Indian economy.
Okay.
Higher oil prices translate to increased costs across various sectors, from
Okay.
transportation and manufacturing to agriculture.
Yeah.
This fuels broader economic anxieties and can further erode investor confidence.
So it's this like interconnected web of global trade issues causing investor unease,
Right.
leading to capital flight, a weaker currency making crucial imports more expensive, and rising energy costs,
Right.
stoking inflation.
Yeah.
Yeah, it paints a clear picture.
It does.
Of these pressures now, is this downturn affecting all parts of the Indian stock market equally? Or are some sectors feeling it more?
Yeah, that's a good question. And the impact isn't uniform.
Okay.
We're seeing specific sectors experiencing more significant declines.
Okay.
For example, IT stocks,
Okay.
including companies like Persistent Systems and Tech Mahindra,
Right.
reportedly face losses of up to 4.5%.
Okay.
This suggests that industries with strong ties to the global